Welcome to the Real Estate Investment Hub, where you can learn how to grow, scale, and optimize your real estate portfolio through our conversations with investors and thought leaders in the real estate industry. Let's move on to the episode.
All right, guys, welcome back to the Real Estate Investment Hub. Once again, I am Chris, and this is my business partner, Rodby.
Hey, guys.
And today we are talking about a huge topic, both in, specifically in BC and Ontario, and that is pre-sales. In Ontario, they call them pre-construction homes.
Right.
A massive topic right now, especially with Ontario, with the market not doing too well. But yeah, today we're talking about pre-sales.
Perfect. So for those that are just getting into the real estate investing, what is a pre-sale, Chris?
Okay, so a pre-construction or pre-sale home is one where the developer is essentially kind of selling you a dream, and they're selling you a contract for a product that will be built in a couple years.
Right.
It's super. I honestly think a lot of people in Vancouver probably have heard of what a pre-sale is. But usually you are buying, let's say, 3 to 5 years out, depending on the type of product that you are buying.
Right.
You are probably putting, depending on the market, between 10 to 20% down, split into a few different segments. And you're essentially just waiting for completion. And you're waiting and you're hoping that the product actually gets delivered on time.
Yeah. Well, one thing to preface before we get into the details, this is more so an intro to the topic. As many of you know, real estate investing is a very complex topic to get into. So this is more so an intro to that. There'll be more episodes about this, but this is a good place to start. Pre-sales are a great investment vehicle, as we know, and as well as our clients, right? So depending on your situation, it may be more attractive to you. So for example, people our age, right? Young professionals that are just getting into a market, it is a good way to get your feet wet, I'd say. Do you want to share why?
Yeah, for sure. So, talk about young professionals. You and I are around the same age. We have similar friend groups as well. So I think young professionals is really where the pre-sale opportunity shines, because let's be honest, nobody has 20% lying around in their bank account. And even if they do, it's usually locked up in different types of investments.
Right.
So whether someone is invested in ETFs that they can't take their money out, or even their RRSP. Usually nobody has like 200 grand just lying around.
Yeah.
So
be nice.
So the pre-sale opportunity is perfect for those types of individuals. The way it usually works, the deposits it's 5% down. Usually upon contract writing, your next 5% or the balance of your 5% is usually due within the first month.
Right.
Your second deposit, really depending on how long the pre-sale is. If the pre-sale is only 1 or 2 years, your deposit scheme gets significantly shorter. But if you are buying a concrete condo, especially the ones that we're seeing now where you're buying 5-6 years out, then your full deposit might be 20% in total.
Right.
Spread over about 2 years.
Yeah.
So 5% within 30 days, 5% maybe in 6 months, another 5% maybe a year or a year and a half out, and then your last 5%, if there is a last 5%, it'll be like 1 or 2 years out. So for young people especially, you can really work towards those payments. Obviously, do not go into a pre-sale, and I will emphasize this once again. Do not go into a pre-sale if you don't think that you will have the money in time, because you will lose your deposits. But it is really, really good for young people, because it does give them a little bit of time to save up, even use some of the money for bills, expenses, rent as well. And it does take a little bit of pressure off people.
It definitely does. And like you said, since it is staggered, it's much more manageable in terms of cash out, right?
Definitely.
So instead of having, the down payment all at once, it's within that year and a half, 2 year time period where you can really plan. And just like Chris said, we need to really emphasize that having a plan for all of this is definitely a good idea, right? You don't want to walk into this just having the ability to pay the first deposit and
Or the first two deposits.
the first two, and not really knowing what to do next, right? Another major advantage to this, I guess more so on the investment front, is you don't need a mortgage until completion. So that being the case, there, besides the deposit, there's really no money coming out, right? While your investment is appreciating and gaining equity, right? Maybe you can shed some more light.
Yeah, of course. So I think a really big thing for investors specifically about pre-sales is a lot of the investor clients that we do have, some of them may be self-employed, or at least their taxes are structured in a self-employed way. Like a lot of salespeople, even realtors, mortgage brokers, some doctors and lawyers as well also have self-employed taxes. So for those people, it really gives them time to structure their taxes in a way where they are able to secure the mortgage, and they don't necessarily need to declare everything income-wise today in order to buy property today. Another huge advantage is for a lot of investors, for if you are buying into a project that's, let's say, 1 or 2 years out, or let's say you're buying somebody's assignment, which we can cover later on as well. Your time frame for how long your capital is locked up before you really make a positive return is significantly shorter. So for a lot of people, that is greatly beneficial as well. So I think, saying all this, it really just comes down to the fact that pre-sale is good because it gives people time.
More flexibility.
And exactly. And there's also different segments within pre-sales, like assignments and what else, where you can really create your own investment strategy based on that project. And Rodby, something you were saying before that I think is extremely important is you need to have a strategy going into pre-sale.
You do.
A reason I say this is if you look at a lot of people that purchase into pre-sale 2021 or even at the peak of the market, let's say first quarter 2022, a lot of people, they seem to not have done their due diligence.
Yeah.
And they purchase into a product with rates essentially being zero. Now that rates are in the 5s and the 6s, they can no longer secure financing. So it really seems like a lot of people did not have a plan going into it, whether they purchased the product themselves or with a realtor that may not have shared a strategy with them. And it seems like a lot of people are now having to forfeit their contracts. In Ontario, especially, I specifically look a lot into the Ontario market. I think it's pretty fascinating what's going on out there. People are literally walking away from deposits that are in the 6 figures, in like the $100,000 to $300,000 range, because they can't secure financing.
They don't have the option.
And also they can't assign the unit because nobody else wants it either.
Yeah.
Because it's completing next year. Rates are, 500% of what they were initially. So they have to forfeit all this capital. So it wasn't even an investment to begin with. So it's incredibly important to walk into this, pretty complex situation with a pre-sale with a very, very strong plan in mind.
Exactly. And I would even go further than that and have a plan after
100%
it completes, right? And we're a big fan of providing a long-term plan for our clients, not just for that one investment, but really setting them up to have the ability to invest further and grow their wealth. But with that being the case, not all pre-sales are made equal, right? Just like you mentioned, it really depends on your situation as well. But let's say everything else being equal, what are some green flags for pre-sales that are a good investment opportunity?
So I think maybe in BC and Ontario, we have been a little too blessed with the fact that the market has been consistently going up over the last decade, really over the last couple of decades, but especially within not even a decade, maybe the last 5, 6, 7 years, the market has been running like crazy. And people are going into contracts and developments where they think that anything will go up. And they will double their money in a couple of years, but that's unfortunately not the case. If you look at the actual fundamentals of what real estate investing should be, you need to buy into areas where they are actively working on infrastructure to support the growth and the population growth. you are buying into areas where people are actually having good jobs, where they can either afford the rent or, the property itself on the buy side. You're buying into projects where people are actively building commercial spaces as well. And right now we are seeing a huge influx of mixed-use development over the last few years as well.
Residential, commercial,
so,
for those that don't know.
Exactly. So it'll be, commercial unit on the bottom. Let's say you have a TD Bank and you have like a Subway or something. And then you will have a couple floors up or maybe even 30 floors up. So that people will actually have places to go after they purchase into these products. And of course, some of these products or some of these pre-sales do come with premiums as well. But at least you're buying into a development where they're actually building an ecosystem around the unit, and you're not only buying the unit itself. Now, saying all that, I'm not saying that buying into projects where you're only buying into a unit is necessarily a bad thing, but you do want to expand your search area within, let's say 5-10 kilometers or so, and see, okay, even if you are not planning on living in this place, and even if you do have a tenant in place after the project completes,
right?
Will your tenant actually have anywhere to shop? Is there any place to buy groceries? Are there schools? Is it in a good catchment area? In terms of proximity to transit, is there anything around, or do they have to walk 20 minutes in the next bus stop? These are really things to consider, because like Rodby and I were saying earlier, you need to go into this with a very strong investment thesis in mind and a strategy in mind, because if you don't, that's unfortunately how you lose money. And we're not talking about $500, $1,000. You're literally talking in the 5-6 figures at this point. And we have seen that time and time again, and we just don't want people walking into that situation.
That's right.
Now, Rodby, you were saying that people should have a strategy in place for after it completes as well. What are some kind of basic strategies that people should have for when their pre-sale completes?
That's a great question. I think it all starts, first and foremost, the strategy to be able to complete, right? And even before that, finding the right pre-sale. And what I mean about that is related to what you just mentioned. There's a lot of factors that you need to look into that are great signs for how this development may turn out once it's completed. So like you said, infrastructure, right? The amount of businesses that are opening up there, the crime rate, for example. Factors like that really determine the potential for the development. One way that I like to think about it, I'll share this with everyone here. Just think about the attractiveness factor for, let's say, renters, right? If there are factors that will bring more renters into that area, that's usually a good sign, right? So let's say there's a SkyTrain close by. There's access to the highway, very quick access to the highway. Amenities, like you said, recreational centers, parks, even grocery stores and things of that nature. I would say those are all very good signs of a project having a lot of potential, right? And with that being said, that in a way is sort of planning for the future already, because in areas like that, the equity once the project is completed is usually a lot higher than the ones that don't have those factors, which gives you the ability to then, either sell that property and buy a better investment, or, rent it out and take out the equity as a home equity line of credit and use that as a down payment for another investment, right? Just having that flexibility, I think, is a huge opportunity for a lot of people here in Vancouver, but also in Ontario. And on the other side of that, if you don't plan correctly, there's a lot of risks involved. So for our clients, both Chris and I, we really do an assessment on the opportunities, but also on the threats. It's very, very important. So something that we were sort of getting into but didn't quite get into earlier this episode is the risks of choosing the wrong pre-sale. So I'll give you guys an example. let's say you buy a pre-sale and you paid all the deposits. However, close to completion, the lender goes over there and does an appraisal. And let's say the appraisal comes in lower than what you bought it for. And there's that difference. Let's say it's 20 grand, 30 grand, whatever it is. Guess who's paying that? Right?
Not the bank.
Not the bank, it's you. And that's out of pocket. You can't finance that.
Mm-hmm.
So that's one of the major risks of pre-sales. That's why it's very important to do not only a risk assessment, but also the potential of the price point when it does complete, right? That being said, I won't say any names, but there's a few projects in the King George area
Mm-hmm.
where if you're looking at the pricing compared to the resale,
Even brand new resale.
the resale is a lot cheaper than what the pre-sale units are selling for. So that being the case, is it really feasible to think that within the next couple of years towards completion, those pre-sale units will appreciate that much? In my opinion, probably not.
Mm-hmm.
Right? So really having a high level perspective on pre-sales is something that we definitely recommend, right? Because like we mentioned earlier, not all pre-sales are made equal, right? What are some other, I guess, risks to pre-sales that you've seen?
Yeah, so I've seen a lot. I will actually kind of circle back to what you were saying about how they're, let's say, in the King George area in Surrey, and really in a lot of other areas as well. There is a massive spread between the resale and pre-sale price, and I will kind of go into why this is important.
Mm-hmm.
So right now, if you go on RUW, or if you're a realtor and you're listening to this, go on Paragon, and search up units that are built, let's say, after 2021. Compare the price per square foot to brand new inventory or to pre-sale inventory, and there might be a spread of $100 to $300 per square foot, which is massive.
Quite significant.
So if you really think about it on, even from a logical level, how are you going to make any money when there is such a massive spread? It means that the market would need to catch up in the $100 to $300 per square foot range, and you need to basically double that to make anything significant on a cash level. So this is really one of the biggest risks that a lot of people have, and one of the big reasons that a lot of people aren't making money in pre-sale anymore. Not saying that you can't, but you really just need to do your analysis even on this front. And now in terms of risks, we were, even planning for this podcast itself, I think we went on so many tangents about so many different stories, from things that we've seen in our careers. We have like 7 years combined, right now. One very noteworthy project that I've seen, so I will not mention the project nor the developer's name. It's actually a good project and it's actually a good developer, but it's really a market timing issue, and this is where I saw people lose. So when I started my career, it was at the end of 2018. I really got into the swing of things in 2019, and that was really the last market lull. That was really when, some people came up to me and said, this is the worst market I've ever seen, and so that was really when the market dipped the last time. And because of that, people at that time bought into projects in, let's say, 2016, 2017. That was really when a lot of foreigners came in. That was when the market was running like crazy. And now completion comes 2019, and I literally saw people losing, I think the number was $220,000 or $230,000 on a 2-bedroom near Metrotown. And they bought the 2 beds for, let's say, I don't know, like $200,000 or $800K, something around there. And from where the market was and where they bought it, it was such a massive. Oh, sorry, they actually bought in the millions, I believe, for the units that I'm thinking about, because it was over $1,000 a square foot, and they were trying to sell for $800K, and it was like, at that point you're not recouping anything. because your mortgage on that itself, if you put down 20%, was 800K. So you're literally just trying to pay the bank back, and you're losing your entire initial deposit, as well, as well as the opportunity cost there, because you held up your capital for 2 or 3 years. Now projects are even 4 or 5, 6 years out, so that's even worse. So yeah, there's been so many of these stories, and it's honestly a lot more common than you think in Vancouver. I think, especially from people in our industry, and not to talk bad on anybody in our industry, but a lot of the even news is only positive news. It's like, oh, this guy made 2x cash on cash, or this guy made 100K on a one bed. But I would honestly say that the downside and the people losing money, it's like, if anything, it's kind of like a 1-to-1. Or maybe the people losing money, it's actually more than the people making money. I would say in pre-sale.
Possible.
Because there was just so many of these stories. There's so many people that, buying the projects themselves, and they're just not informed, unfortunately.
Yeah, it's quite unfortunate. And to your point, the worst thing, of course, is to lose money. But the second worst thing is just to break even, because the opportunity cost of you basically losing that amount of time where you could have invested in something way better, it's also not great, right? That's why, like, when we work with clients, just speaking for myself, but I'm sure you do as well, we provide best case and worst case scenarios, and we're very conservative with our estimates to make sure that, knock on wood, even if the worst case were to happen, it's manageable, right, based on their situation. To your point, though, with the timing for that project, for the people that can complete, the worst case is probably just holding on to the unit a bit longer. But again, you're really wasting time there, right? Worst case, you'd have to sell it off, right? You're not able to make those payments. Definitely not a good position to be in.
It's definitely not. And I'll kind of lay out, because Rodby, you were saying that we do provide a lot of options for clients, or at least we help them strategize for a lot of options. Kind of end to end, what that can really look like. So, okay, so let's say we already put down our 15-20%. We are a couple years into the project. I think the first thing is you need to really manage your expectations in terms of how much this thing can go up or down. The second one, you need to manage your expectations for how much what the interest rate looks like at that time. The kind of climate that we're in right now is really proof of all that. So I always like to tell my clients, if the interest rates go up, let's say 2-3 points, are you still okay? Or 200-300 points. Sorry, are you still okay? Or basis points. Are you still going to be okay with that investment? Can you actually uphold all these payments on top of your principal residence? Maybe even the payment went up on that as well. Because let's say for that Metrotown project that I was talking about, people wouldn't have lost money if they were to hold the product. But I think they didn't run their numbers correctly, and that's why they had to, sell for a loss. But really, you look at Metrotown right now, a 2-bedroom that's close to 1,000 square foot, or maybe in the 900s, it's easily over $1 million, right? You're talking maybe 1,300-1,400 a square foot kind of thing. So those people would have made, in fact, a lot of money, right. But they unfortunately didn't do their due diligence, didn't run their numbers correctly in the pre-sale phase. I think their only exit at that point was really either a sale or probably an assignment, because that's what a lot of people were doing at that time, and even right now. So that's kind of how they lost money. But if you go into this investment, and I'm right now, guys, I'm not saying work with me, work with Rodby, but really, if you walk into a pre-sale, even if you are buying the pre-sale by yourself, have a strategy in mind from the second you walk into the center all the way to the day you get keys, and maybe even 5-10 years after that as well. Know what you are doing with this, because you're here to build wealth, and you're here to actually invest your money. You're not at a casino. You're not playing blackjack. You're not at a roulette table. You're not just throwing money down and hoping for the best. You're literally potentially putting your life savings down. So let's have a very strong plan walking into this thing, so we actually optimize our chances of making money,
Mm-hmm.
and maybe changing the future of your family as well.
Absolutely. Very well said, Chris. I think, both you and I agree that the approach to take, it's not more so going for the big wins, but incrementally increasing your wealth for a long period of time that is consistent. That is what builds wealth, not necessarily taking those big risks and hoping for the
big
best.
swing. Yep.
It's not feasible, first and foremost, but it's also very stressful to do it that way, right? You don't really have control over your investments, and that's something that you want control over. So enough scaring the audience, Chris. Let's talk about some of the
good projects in
the
mind.
good projects and some of the success stories that we've had with our clients.
Yeah. So success stories, obviously, we've helped a fair amount of people make a good chunk of money in the pre-sale space. In this podcast, we don't really want to put names to projects, and but of course, if people are interested, they can reach out to us to learn more, even about past successes as well. But I think really just creating these plans for our clients, where even like I've sold a fair amount of pre-sale in 2021. Interest rates were very low. I was telling my clients at that time that, okay, before COVID, interest rates were in the 3s, 4s, really depending on your ratios and your income. So let's actually base our projections on that. Of course, rates have gone higher than that, but my clients went into it with that expectation. Like, okay, my payment on a 1-bedroom isn't going to be $1,500. It's going to be significantly higher than that. And on a 1-bed, come completion, even for people that are living in it for themselves, it's probably going to be closer to 25. Base maybe 2,000 to 2,500. So my clients were fully ready, fully prepared for that scenario. I'm glad. I'm kind of happy and sad that we were right about where the interest rates were going to go, because a lot of people kind of saw, a lot of people did see where interest rates were going with the bond yields and everything too. So that's kind of the plan that we had in mind. We walk into the project. A lot of those projects that we help clients buy into during COVID, they haven't come close to completion yet, but I'm already starting to see people assign units within those projects because they have that payment shock. And now it's like, oh my God, I thought it was $1,500, but at 6%, that's like $2,800. With the property tax and with the strata fees, that's like $3,400. What am I supposed to do? So you see a lot of people reacting negatively, because they didn't have that plan in place.
Weren't prepared.
So, I'm just happy for the clients that you and I both work with, that they walked into it. They knew exactly what was going on. We talked about the potential downsides as well, and I think they will do quite well. Even before the COVID market, I was doing a lot of this with my other clients as well. Like, let's go into it with a couple potential exits, meaning, we either sell, we assign, or we rent. And let's be fully ready for these scenarios, because any of them can happen. And clients that usually follow these types of plans always do quite well on their investments. And Rodby, let's talk about a couple projects that we are quite excited about.
Absolutely. Before we get into that, just to add to what you're saying, it's definitely a good idea to get as much information as you can. But, Chris and I, what we're really saying is all we can do is look at the telltale signs and basically project from there. We don't have a crystal ball. We can't tell the future.
Nobody does.
But based on historical data and what we've seen in the past, we can share with you the likely outcome, right? Which, like you said, you did for your clients. But yeah, so some projects that we are excited about. Traditionally, master plan communities are quite great for investments for a number of reasons. They're really building a community, not just a one building kind of thing, but multiple towers, right? Even putting in parks, for example, recreational centers for the entire group of towers, not just one thing.
Schools
Schools as well, right? And they're usually located in areas that are very accessible by public transit or highway, right? So those are all great signs for pre-sales that have the potential to do very well. But even then, of course, be careful and really do a proper risk assessment to see whether or not it is feasible for that project to do well. One project master plan community that we are excited about, again, no names, but it's located in Coquitlam, right? Multiple towers.
I'm sure most people know what
Most
project
people
this
know,
is.
I'm pretty sure. The first waterfront community in
Mhm.
Coquitlam, right? I think there's north of 15 towers. But a lot of people are excited for, number one, the wow factor of, the first waterfront community in that area, but also some of the things that they're putting into that. Maybe you can share.
Yeah, for sure. So a ton of infrastructure, schools, community centers. Really think about River District along
Mhm.
Marine in South Van. That's essentially exactly what this developer is doing, and we did, we did bring some clients over to that project as well. But that's an example of a good investment.
Mm-hmm.
Of course, come completion 2026, 2025, like or further, we have no clue what the numbers will look like. But because real estate isn't a short-term play, there are much better investments if you are looking for a short term, but
Mhm.
real estate is traditionally like a 10, 20-year play.
That's right.
So we are putting our clients into products and projects where, really regardless of what the market does in the short term, let's say in short term really meaning 5 years,
Mm-hmm.
that they are positioned for growth because of all the other factors and the infrastructure that the developers are putting into these projects. So no, we're not really specifically trying to sell you on this project itself. We're
Yeah.
really just highlighting what's good that really can be out there and is out there today.
No, that's a good point. One thing that's great about BC compared to other areas of Canada, even the world, is that here, we're quite landlocked, right? Just
Mhm.
based on geographical factors. So that being the case, thinking about it logically, it makes sense that properties here would appreciate a lot quicker than others. But the mindset to have with investments, it's really a long-term leverage play, right? So if you set your portfolio up in that with that approach, you're really not as sensitive to how the market is, right? Which is a great position to be in, because if you're looking for a short-term investment, yes, you have the potential to make a massive rate of return, but it's also
A massive
incredibly
risk.
risky, right? For example, you could do a flip, right? That is, in my opinion, a good way to make money, but also a very good way to lose money, right? You really need to know your stuff, and in most cases, the safest way to do it would be in an upswing, right? So maybe in the coming years, once the market starts picking up again, it would be good. But for our clients in particular, we like to take the slower, consistent route to build their wealth.
Mm-hmm. For me specifically, I like telling my clients, look, the market in itself, in terms of the stock market, if you invest into any ETF, you're looking at about 6 to 8% a year historically.
Mm-hmm.
If you are taking the extra risk with real estate, you just want a little more than that, and you are that's the position you want to be in.
Mm-hmm.
We're not. Of course, it would be great if our clients made 50% cash on cash, but really you're looking for a little more than what an ETF can give you, or maybe you just love the product itself and you love real estate in itself, and you're buying something for your kids to live in. Maybe your kid is 12 right now. You see where the market is going, and we have a lot of clients like this as well, where by the time their kid is 18, 19, 20, you at least have a condo, and the kid will be okay.
Mm-hmm.
So yeah, you're not really, like we said a few times in this podcast, you're not looking for those huge swings, because it can swing back on you the other way as well.
That's right.
You're really looking for a little more than an ETF, with the additional benefits of real estate like forced appreciation, and that's really where you want to be. In terms of growing wealth, scaling a portfolio, you're looking, like Rodby was saying, you're looking for those long-term wins. Let's say 10%, 10%, 10%, 10%, as opposed to swinging for the fences and trying to make 50% or 100% on your investment. And then that's how you build wealth over a very long period of time. That's why guys like Warren Buffett are still in the game, is still at it, and still in the green, as opposed to, let's say, during COVID, when a lot of the crypto traders, like, where are they now? They swung for the fences, and a lot of them are still there. And I have friends in the space. I have friends that are professionals within the space. They're still making money, but for a lot of the other guys who he locked their homes to put into Bitcoin when it was at its highest, like maybe a year ago, where are they now?
Exactly. And it doesn't have to be the only investment vehicle that you take, right? We're actually working on some things that require a bit more capital, but in terms of risk level, it's relatively the same, and it has the potential of a higher rate of return. But we'll save that for another episode.
Yeah, so I think that's it for today.
Great way to start pre-sales.
Yeah, great way to start pre-sales. I think the main takeaway, guys, is please have a plan walking into it. Even if you're in Ontario, I can't work with you anyways because of of where my license is. But if you're in Ontario, please walk into it with a plan. Find a good agent that can help you, guide you from end to end and actually make you money, as opposed to someone who might not focus so much on the investment space. They're just looking for that commission, and but for them it's a win. For you, it might be a huge loss. So please have a plan walking into these projects, because real estate, contrary to popular belief, real estate doesn't always go up at every single point.
Not always.
In the long run,
Not always.
Yes, but in the short run, meaning let's say 3 to 5 years, like, definitely not.
And if you have any questions, we're more than happy to help you as much as we can. Right. Thanks so much for tuning in. That wraps up the first episode of our pre-sales discussions. Thank you.
Yeah, we'll see you next time. And that wraps up this episode. Thanks so much for listening. If you like the episode, leave a review and follow our socials linked in the episode description. Make sure you share this episode with someone you think would get value from this podcast. We'll see you next time.